reputable speakers. Thank you again for dedicating your time. And I will hand the floor to Mr. Mohamed Mahran so that we can catch up with the time lost by my issue with the internet connection. Mr. Mahran, please, if you can share with us, what do you think, or what is the perception from the direct insurance market? Why they think that, yes, we have problems, but also at the same time, the reinsurers should treat insurance companies differently, and at the same time they should understand that the one size does not fit all in terms of the treaty pricing and reinsurance underwriting. The floor is yours, Mr. Mohamed Mahran. Thank you.
Thank you very much, Mr. Momin. Thank you, and good morning, everyone. I wish to start by thanking the fair for giving me the honor to be with you today. I would also like to acknowledge the very useful activities and webinars, as well as seminars and regional meetings held by FAIR since the journey of the active new Secretary General, Mr. Momin Mukhtar. Indeed, we are lucky to have him at the head. The current year, 2022, is about to finish, and it came to end a crisis and perhaps to start another bigger one. The COVID-19 almost finished, but the Ukraine war started on 24th of February. At the first glance, we can say that 2022 was a positive turning point on the medical and the life science due to the significant decrease in the COVID claims. However, for the P&C or property and the casualty, things were a bit undefined due to three wars we are facing. The first war is fighting against nature, the natural catastrophes that occurs, such as Hurricane Ian, flood in Australia and South Africa, and the hailstorms in France, etc. In addition, the second war will be the famous, or better to say, the infamous Russian-Ukraine war. And the third war, it's between the central bank and the time in order to bring the inflation down all over the world. Clearly, with every war, there are victims, and only the smartest would survive. I hope we as a direct insurers will find a way not to be one of the victims, and would be the survivors and probably the winners. My comments will be in two parts. One is message to my colleagues in the direct insurance, and the second is request to the reinsurance community. Let's start with the direct insurance. And I put a disclaimer, despite some of these messages will seem basic, but usually no harm for reminding ourselves even with the basic things. My first comment is many of the treaties will have or already has an indexation clause. In view of this, claims has to be done as rapidly as possible in order not to be subject to this clause, which may put the cedents in clear disadvantage due to inflation. Second message is reassessing the reserve on a regular basis, probably shorter than what we used to do in the past, and they keep the reinsurance advised of whenever possible, especially for the cases which it comes with the US currency. Separation, I mean US or hard currencies, or currency different from the local currency. Third would be the separation between the policies issued in the hard currency and those issued in a local currency. And the reason for this is to elevate the inflation factor, which I am sure Dr. Vladimir and the colleagues will put some light on it. And this is in order to elevate the inflation factor and also provide fair assessment to the portfolio, especially when we are talking about the XOL treaty. Get yourself involved. This is still, I am with the message to my colleagues in the direct insurer. Get yourself involved in the pricing discussion and try to understand the rationale behind the changes requested by the reinsured at renewal. I believe this webinar is an invitation to all of us to spend more time either with our brokers or leaders to understand the method used and probably the factors affect either we are working on the burning costs or working on the exposure or whatever factors also will be taken into consideration. Locally and perhaps regionally, we are fortunate in two ways. One, The Nat Cat exposure is not major concern, except of course for few countries. Number two, being non-litigious countries, in majority of our countries, liability exposure for long-tail claims is considered also moderate. As such, inflation factor may not be a major factor in the pricing whenever we are talking to our colleagues on the other side of the table, i.e. the reinsurers. We must ensure that there is no leakage in the reinsurance cover. This is to say, to buy the limits required according to the portfolio analysis in the US dollars, for example, or whatever currency we are using. In other words, to optimize our reinsurance purchases in this difficult time. Now, and I hope we still have some time, I am moving to the important topic, which is my message, or better to say, request to the reinsurers. So since we have some of the colleagues here from the reinsurance, I start with saying, please, we are mostly considering ourselves as emerging markets, even though we are doing, or at least majority of us are doing a good job in managing our figures, managing our results. As explained above, exposure is also moderate. Our reinsurers programs will likely be affected inevitably, as they are mainly controlled by the reinsurance giants, probably in somewhere else in the world. We have also witnessed some clear hardening signals as the pricing of the reinsurers are excessively high due to severe losses from the international market, which we appreciate, but applying the same rates and same standards to other less developed markets makes it a challenge. Some other noticeable moves are reducing capacity, increasing retention in US dollar, reducing commissions, reducing the event limit, especially for the engineering and the property trees. In addition to all of the above, there are common impacts on the reinsurance sector. We have the Russian and the Ukraine war that is disturbing the whole world and our industry in some instance. We are unable to find markets for such coverage to cover, for example, marine comes from this area. Although we have to admit this is not a normal circumstances, we also believe with each crisis there is an opportunity, and clearly with applying the risk factor, we should be able to offer service to our clients. Another issue we face, and particularly we have seen this in Egypt, the insurance market depend on the global CAT modeling tools. But unfortunately, it is not in our case based on full fact and history, but rather on assumption due to the lack of data in our region in general. This makes them sometimes increase the rates on certain periods where these scenarios are least to happen in the country. I'm just saying that I don't have so much other than this, but I have a couple of points also to not to feel you, to let you boring. Retention, a change in the local currency. For Egypt, for example, and I am sure this is applicable to many of the emerging markets, is facing the devaluation of the currency, which is causing internal obstacle. Clearly, increasing the retention of the local currency cannot be looked at. It is a problem of the reinsurers. We understand that this is our local problem. However, it's also important from our side to share our pain, and then we will have some understanding whenever we come to it. Since we are members in the FAIR Federation, I'm asking all the regional players in Africa and the Asian reinsurance challenging time for all of us, but without any doubt, rating, I mean the financial rating would require, and unfortunate, many of the companies' rating have been affected, and they are really missed in this time as they are aware of the market conditions. I hope my notes are quite concise and summarized. And definitely, again, thank you very much for your patience and listening. Thank you very much.
Thank you so much indeed, Mr. Mahran. Your point of view really shed light on the problems and the pain the direct insurance market has. And I feel some sympathy also with the insurance companies, because from one side they are getting some pressure from the reinsurance to adjust and to increase rates and to tighten the terms and conditions. But on the ground, they also face problems with the clients, because the clients will have to increase the sums insured of their properties, and at the same also time, the insurance, the direct insurance or the direct clients are also having economic pressure, because their margins actually have significantly squeezed by the waves of inflation and so on. So I feel that the insurance company now is between two stones. You know, from one side, they are unable to implement some adequate terms and conditions and prices to their own clients, whereas the reinsurance companies are actually asking for additional rates and tighter terms.